Hi, everyone, and welcome to UGE International's webinar. UGE International is publicly listed on the Toronto Venture Exchange under symbol UGE and on the OTCQB in the States under symbol UGEIF. Joining us today is UGE's CEO, Nick Blitterswyk, and UGE's CFO, Paul Kanya. They will be providing an overview of UGE's 2019 financial results, as well as an update on the company's corporate operations and upcoming milestones. At the end of the presentation, we will open it up for a live Q&A where Nick and Paul will be able to answer any questions you might have. If you're interested in asking a question and are logged into the web platform, you can submit your questions to us directly in the chat module on the webinar platform. Please note, today's call may contain forward-looking statements that are subject to risks and uncertainties that may cause actual results, performance, or developments to differ materially from those contained in the statements and are not guarantees of future performance of the company. No assurance can be given that any of the events anticipated by the forward-looking statements will occur, or if they do occur, what benefits the company will obtain from them. Also, some risks and uncertainties may be out of the control of the company. Lastly, RB Milestone is not a registered investment advisor or broker-dealer. Please note, this call is being recorded and will be made available on the company's website following today's presentation at UGEI.com. It is now my pleasure to introduce you to UGE International's CFO, Paul Kanya. Paul?
Thanks, Jack. First off, I would like to welcome everyone to the call and thank you for joining. My name is Paul Kanya, and I am the CFO of UGE International. For this webinar, first I'm going to run through where you can find the full materials on our website, as well as any accounting policy changes we adopted in 2019. Next, Nick Blitterswyk, our CEO, will review some of the key pieces of our financials and how they relate to the business. Our goal is to be mindful of your time and keep this webinar concise and to the point. We will be speaking relatively high level and focusing on the areas that we feel are most important to understanding our recent results. In terms of accounting changes this year, the only one to mention is IFRS 16 as it relates to leases. Fortunately, for the most part, we have flexible arrangements for our offices, such as using co-working spaces, so this does not have big impact on us. Our New York office does have a longer-term lease, but even in that case, the lease expires early next year, so the effect of IFRS 16 on our financials is quite minor. I also want to remind our listeners that we report in US dollars, so the results in this webinar are represented in USD unless addressed otherwise. Although we will keep things fairly high level on this call, our website address is listed here, where you can download our full financials. As we start to dive into the financial results, we'll start with the income statement. At a high level, we saw revenue decrease in 2019 as the EPC services business was discontinued, but we saw significant improvements in gross margins and decreased overhead expenses as we shifted the business towards self-developed projects. Though we are not yet at our goal of being consistently profitable, our loss narrowed significantly as the fundamentals of our businesses began to improve. Next, Nick will go into more detail on a few key items.
Thanks, Paul. As Paul mentioned, I'll run through a few key areas of the financial statements and what they mean for the business, starting with revenue. First, we of course realized that our revenue dropped significantly in 2019 as we completed the hard but necessary process of winding down our EPC business and concentrated on our turnkey project development business, which will drive results going forward. But we are excited to now be generating the type of revenue that we want to be generating, as the business is completely focused on developing, building, and financing projects for our own book. We started the year wrapping up our last EPC projects while moving new self-developed projects towards construction. This saw revenue falling early in the year, but by Q4, we had returned to quarter-over-quarter growth, and we are expecting year-over-year growth in 2020 as well. Just briefly on the impacts of COVID-19, it has temporarily slowed down project deployments in mid-March, but we see strong signals that construction will be allowed to pick back up around New York City and in the Philippines in the coming weeks, and we'll be ready to jump on that opportunity to move many projects forward as soon as it does. Even with this slowdown, we expect significant growth this year. As mentioned, Q4 was the first quarter where we had self-financed projects under construction, some of which have reached commercial operation already this year. At year-end, we had 6 such projects under construction, 3 of which were in the US and 3 in the Philippines. One item to note is that unlike client finance projects, self-finance projects don't start to generate revenue for the company until they reach commercial operation, so we wanted to highlight the progress of those projects as well. At year-end, we had approximately $700,000 of work in progress and unbilled revenue related to these projects. If they were client finance projects, that would have added about another $1 million of revenue in Q4. Instead, these projects will start to generate recurring revenue as they reach commercial operation this year. In terms of the benefits of self-financing projects, our expectation is that we will be able to capture similar net cash flows during construction on the projects and then earn upside through the project returns over time as well. We are also already seeing an increased speed of project execution since we manage more of the process and rely on fewer external parties, and think we'll have better repeat client relationships through this approach as well. As a reminder, almost all of our clients are the repeat project nature. The other benefit, of course, is that through self-financing projects, we will be building a growing base of secure long-term cash flows, which will add to corporate stability as well. We will go into more detail on the revenue impact and progress of our self-financing efforts in our Q1s. As we focused on turnkey self-developed projects, our gross margins improved significantly in 2019, averaging 27% compared with 10% in 2018. This was actually our best result in our 6 years as a public company. In late 2018, we took steps to streamline operations and start the process of winding down our EPC services business. This saw our overhead expenses fall significantly at nearly 40% throughout 2019. Our expectations are that overhead expenses will stay relatively flat in 2020, even as revenue returns to year-over-year growth.
As we look to make constant improvements in our corporate performance, I wanted to run through our debt position as well. First, at the corporate level, the company has approximately $1.45 million of debt with an average interest rate of approximately 8%. For our 2 subsidiaries focused on developing projects in the US and Philippines, both have short-term facilities available for executing projects. The one note I will make on this subject is that at year-end, the US was leveraging small but higher interest short-term facilities that we sometimes use to accelerate the early stage development of projects. Those facilities have since been paid off. As discussed, another important aspect of the business is the financing of projects. As it relates to our debt table, there is approximately $700,000 of project leverage as of December 31st, which relates to projects that were under construction at year-end. For the Canadian EPC business, which is being restructured, it has 2 secured facilities. One is an operating line which we have been making progress in paying down and intend to have paid down entirely in 2020. Second, there is a construction financing facility that was used to finance projects for which we have not yet been paid for. For this project, there's a lawsuit where we are aiming to collect funds owed to us in excess of the debt amount. As of today, trial is expected for the fall. Relating to COVID-19, many of you will be aware that there are various government programs which provide low interest and in many cases, forgivable loans. In Canada, we've been successful in applying for CEVA loans for 2 of our businesses totaling 80,000 Canadian, as well as a 75% wage subsidy, which covers 75% of salaries up to an annualized wage of approximately 60,000 Canadian. In the US, so far, we've been successful in applying for the Paycheck Protection Program, which provides a fully forgivable loan covering 2.5 months of salaries. The amount we received from the PPP was $132,000.
Thanks, Paul. Regarding the EPC business, as has been mentioned, in 2018 we decided to take steps to downsize this business unit, both due to regulatory changes in Ontario, as well as concentrating our focus on the develop, build, finance business model that we focus on in the US and the Philippines for the time being. In order for us to wind down the business, we first had to finish up projects won prior to 2019, which we did throughout the year. Afterwards, we considered our options and decided to follow what is known as a proposal in the Canadian legal system. We chose this route instead of bankrupting the entity entirely, based on our belief that this would provide a cleaner and more organized process for winding it down. In terms of the status of the proposal, we filed it in January, and creditors voted overwhelmingly to accept it in February. The last step will be for courts to approve it, which had been scheduled for March 23rd, but has been pushed back for the time being due to COVID-19. Currently, we expect that to occur sometime this year, probably in the next few months. Once the proposal is accepted, we expect to see about a 54% decrease in the short-term liabilities of UGE Canada RE, with the remaining portion paid out over 2 years. Important to note here is that the majority of the company's overall working capital deficit is attributable to this business unit, so this will meaningfully improve our balance sheet. I also want to note that we don't expect any asset write-downs related to this proposal. Rather, we took any such write-downs for the business in 2018 in the form of writing off goodwill and project-related value. One of the areas of the company that we are most excited about is our project backlog, which was large at the beginning of the year and has grown by more than 50% since then. As of December 31st, our backlog was a little over 30 million US and was virtually 100% focused on our self-developed projects. Since the beginning of the year, growth in the backlog has accelerated and is now over 45 million. This was highlighted by the announcement of our largest US project yet at a corporate campus in Westchester, which was announced in March. To put our backlog in comparison, it's approximately 10 times our current market cap and 9 times 2019 revenue, so it is something we are really excited about in terms of growth of the company. As our backlog matures and self-finance projects begin to generate revenue, we plan to provide increasing amount of detail in future quarters. I'll also just mention that in addition to our backlog, our sales team is very busy and the current pipeline exceeds 200 million. One item I will describe in a little more detail is what exactly our backlog means. In the cases where our client is paying us for the project, the numbers should be pretty clear. They are the amount our client is paying us for the project. For projects where UGE is the financier, though, these numbers are UGE's calculation of the net present value of the project. In our investor presentation available on our website, we walk through an example of how project value is calculated, where a project that would count for 1 million in our backlog will generate 3 million over its 25-year project lifetime in the real-world example provided. So with that, we'll wrap up the prepared remarks by pointing you to where you can find more information. As mentioned earlier, our website is regularly updated and contains all of our financial filings and other updates. You can also follow us on Twitter to get links to the announcements and other media. For example, earlier this week, we had an online interview with Stock News Now, and you can find a link to that video on Twitter. So thanks again for tuning in today. Jack, back to you.
Thanks, Nick. If you're interested in asking a question and are logged into the web platform, you can submit your questions to us directly in the question module on the bottom of your screen. We'll take a few moments to develop the queue. Nick, our first question is regarding your upcoming milestones. What would be the approximate capital requirements for your upcoming milestones in the next 6 to 12 months?
Yeah, thanks, Jack. In terms of the milestones, one thing I will mention is that our Q1s will actually be out at the end of this month. So that'll be something to watch for. The other milestones that we've been focused on, number one is growing the backlog, of course. So, earlier in April, about 1 month ago, we announced a series of projects that brought the backlog over 45 million US. But as mentioned in his presentation, the sales team has been very busy, and one of our goals is to see the backlog exceed 50 million. So that's something that I think we hope and expect will be achieved pretty soon. And then I think the other thing really important for investors as we climb the revenue curve here again is seeing that backlog convert into revenue. So obviously in Q4 we saw that ticking up, and I think we've been pretty explicit that we expect year-over-year growth in that backlog this year as well. So watching that and watching our milestones or watching our revenue increase is another milestone to watch out for. And of course, in the coming quarters, we look to get that over profitable, get to profitable results as well.
Thanks, Nick. The next question we received is regarding acquisitive opportunities. Are you currently open to or exploring potential acquisitive opportunities?
Yeah, on that front, of course, like in our history, we have made a couple acquisitions before. We also made one divestiture as well. I think that you always have to be open to that. But at the same time, like when I look at our backlog, I look at our valuation, I look at our pipeline, I look at our markets that we're in. What we're really most excited about is our opportunities ourselves. And so really like the main focus of the company right now is turning that into revenue and profitability and success for the company. So, I know that we mentioned it on an earlier slide here, but just in terms of the backlog that we have, the margins we've put up, we're talking about margins on that backlog, 2 or 3 times our current market cap. So that's really going to be the focus for the time being. I will say like this industry is very, very fragmented. There is opportunities out there. When in the grand scheme of things, there's a lot of markets that we're not in that we could be. So, I think down the road, we'll look to continue to grow organically and inorganically. But right now, really excited about the opportunities that we have ourselves here.
Thanks, Nick. Our next question is, how, if at all, are actions being taken by your competitors affecting your near-term plans?
Yeah, good question. I think I think the building out of this platform of being able to develop, build, finance the projects. I know, like for example, in our investor presentation, we always come back to that point, and that's really an area that we feel we stand out against the competition in terms of being able to execute on projects very, very quickly, efficiently, with a good customer experience for the real estate clients that we're working with. And that's certainly come out of experiences we've had in the industry and something that we've seen as the biggest opportunity for us. Like I said, it's still very fragmented. And so, the markets that we're in, we often say like we're focused on markets where we feel we are or can be a top 2 player in those markets. And that's very true for the markets that we are in right now. And so from that perspective, I think we're much more a leader than than following what our competition is doing or feeling too impacted by the competition as well.
Thanks, Nick. The next question we received is regarding the pipeline. UGE has 200 million in the pipeline. Is that all in New York and the Philippines? If so, what is your sales plan to go after more markets?
Yeah, so the pipeline right now is virtually all in the U.S. and the Philippines. The majority of that's in the U.S. The Philippines is a really good market for us and takes up a good portion of it as well. Even when we talk about those 2 markets, there's so much opportunity within, like if I just use the US as an example, there's so much opportunity here that we're not capturing. So, predominantly our pipeline in the US is in the New York market. We have some in New Jersey. We've actually, during the kind of, during Corona here, our sales team has actually put a bit of a renewed focus on New Jersey. We see some good opportunities there and hope to see an uptick in our New Jersey deals in the coming quarters and years as well. We talked a little bit about Maine. Maine's a market that we're expecting really big things from, and that's something that we'll come back to, I think, in the not too distant future here as well. But there's so much of the U.S. that we're not touching right now, and the same story goes in the Philippines. So And maybe one other thing I'll say is like the New York market, the greater New York City market, not even mind upstate New York, is very, very early on. And we've done some rough calculations that show it could be about $1 billion market over the next 10 years. That's obviously so big compared to the size of the industry now and the size of UGE that if we just focus on being the leader in these markets, we're going to do exceptionally well for the company and for investors. So that's really the focus now. But with success, I'm sure we'll have opportunities to expand beyond that as well.
Thanks, Nick. The next question is regarding coronavirus. How is the health of your NYC staff?
Yeah, so knock on wood, the health, everyone's in good health. We haven't had any cases yet within the company, and we certainly aim to keep it that way. This is probably a good chance to say that when really in the second week of March, we went immediately to a work from home setup well before there were stay-at-home orders and so on to prepare for this, and the teams are working really well within that. So yeah, we'll continue to watch and make sure that we use proper PPE on site and things like that. And I think we've transitioned really well. I was talking to our systems and IT head earlier today actually, and he was saying like, based on our current systems that we use, we didn't need to change any systems. We're completely based on the cloud already, and we're able to continue using what we've used throughout this. So, from that perspective, I think we've kept a very high level of efficiency and productivity throughout this.
Thanks, Nick. The next question is on the same vein of coronavirus. Do you see this impacting sales for UGE and the industry as a whole in the short and long term?
Yeah, no, good question. I'm going to give a bonus answer and say medium as well. So, what we've seen is actually an uptick in interest, an uptick in sales. So actually driven by results at the end of March, so already into the Corona kind of like slowdown here, we actually saw our sales increase. March ended up being our best month ever for new commitments. And it begs the question why, and that is, at least in theory, our two value propositions that we offer the real estate clients that we work with are either we rent space from them, so we pay them for their roof, or we offer them savings. And in both cases, we're not asking for them to pay anything up front. We're offering to finance these projects, so they just are going to start immediately benefiting from either money in their pocket or savings. And so obviously, when you think about a situation where tenants may be canceling or other impacts the economy is facing, what we offer is even more valuable during, let's say, a recession or any sort of slowdown. And so, in the medium term, I think that's where that's really going to be impacted. In the short term, we're seeing a positive impact as well. And the one caveat there is, as we talked about in this presentation, things have slowed down a bit on site. Like there is, of course, restrictions on being able to be on site and stuff like that. We do see strong signs that construction, at least, will be allowed to open back up fairly near term. And then this long term, just briefly, I'll say, like, the economics, we keep coming back to this, but the economics of the industry just keep improving. Actually, our director of procurement, I was speaking with him earlier today as well, and he had a chart, for example, in the U.S. market, our panel prices, which is our biggest piece of equipment that we buy, in the last about 6 or 7 months, we've seen those prices come from the low 40s to the mid 30s in terms of cents per watt. So, what's that? About a 15% improvement just in the last 6 months. So that's only going to help us even more in the long term here as well.
Thanks, Nick. We'll take one more question. Final question. Given the increased focus on resiliency and self-sustainability, how does storage play into your market potential and/or your pipeline?
So battery storage is becoming increasingly common. Like it hasn't kept up the same speed that it hasn't kept up the same speed that maybe was thought over the last several years, but it is coming along. And so like New York State happens to be a market where storage has done fairly well. So is Ontario actually. So we're in some of the markets where it is starting to grow. We are including it in some of our proposals these days where it provides more economic value. We do have a previously won portfolio that's starting to be installed fairly soon. We actually got permits for the first 3 sites just in the last couple of weeks. And yeah, so I do expect battery storage will play an increasing role for us in the years to come. I don't want to suggest it's going to change things for us overnight, but I do expect it to be included in more projects, and that'll boost the amount of revenue we get out of our projects as well.
Thanks, Nick. And thanks everyone for joining today's webinar. Today's webinar recording will soon be made available on UGE's website at www.ugei.com. If you have any additional questions that have not been addressed on this webinar, please feel free to email Nick at investors@ugei.com. Thanks again. You're now free to disconnect.